All right. Hello, folks. We're going to take a quick spin through the equity markets. We're going to look at SPX, the Dow, and Nasdaq. If you haven't seen me on camera before, hello, my name's Brian. That's me. That's an older picture, obviously. There's the ponytail. That's 2 years worth of ponytail that I'm not sporting in that picture. Anyway, let's jump into the charts. This is SP 500 in the monthly time frame. The equity markets have been so bloated, inflated, artificially pumped up, however you want to describe what has happened in the equity markets for the last 10 years. And all of this is my opinion, obviously. They have arrived at a point where there's no good support nearby underneath current prices. And so I think that's what we're going to see in all of these charts is we've penetrated with today's close and the last couple of trading days, the markets have penetrated current support and they're just not a lot nearby. And so here in the monthly, and I also want to point out, because the markets have been artificially inflated, there aren't really any good Andrews pitchforks for me to draw at this time. And so I have to look for other techniques. It's like, okay, what can I do to try to do some technical analysis on this market? In this case, I'm using Dr. Timothy Morge's, he called this technique double the range. And so when you see price obviously moving through a channel, which that's exactly what SPX is doing there, clearly moving in a channel there, and then you double that range. And so this is just a trend line to get the width of that channel. I duplicate or clone that line, put it on top of the first channel, and I draw my second channel. This line is parallel to that one. So just a second channel. And quite often we find that price respects or at least reacts to the doubling of the range. And so we can see that here. You know, here's price reacting at the top of this doubled range, pushes up above it into what may be the all-time high for a while. May not, who knows? And then price came back down, actually found support there along the top of the doubled channel, more support. And again, these are monthly. You know, that's a long time frame for price to find support at that level if it were just a coincidence. And so what I am suggesting to you folks is it ain't a coincidence. This is a valid technique. Dr. Morge was a very intelligent man. He had 3 doctorate degrees, seriously, 3 doctorate degrees, University of Chicago, what was it, mathematics, economics, I forget offhand what the third one was. Seriously, 3 PhDs, smart man. And so anyway, double the range, that was one of his trading techniques. Dr. Morge traded very successfully for I think all of his career, actually. I think almost 40 years as a successful trader. Enough of my rambling. This is SPX in the weekly. Clearly, we've lost this support resistance zone. Next support level that I see in this time frame is somewhere in there. Obviously, sell signal on the moving averages. That's the 40-week, 10-week, and 40-week. Sell signal in MACD. MACD has dropped down into bear mode. And so based on MACD, the primary price trend is downwards at this point in the weekly time frame. Let's back up to the monthly. Here in the monthly, MACD is still hard into bull mode. So, you know, we can't say that this uptrend is over. It's very long in the tooth. You know, we may find support somewhere and run off to the races again. I'm not betting on it, but that is always a possibility. Here in the weekly time frame, primary trend is down based on MACD. Daily time frame, finally get to where I can draw an Andrews pitchfork that is valid, appears to be valid. We can see how clearly price is reacting at the median lines of this fork. Makes me believe that it is a valid pitchfork. And we can see that in the last 3 trading days, so that's this week, price dropped below the support resistance zone through support at that median line and has now pushed to new lows on this move. And then today, it penetrated what was a potential support level at 39.80. And so the next potential support level is at this next median line. That's just a little bit lower and could reverse and get a move to the upside, actually due for a little bit of relief rally at this point. Next support level, horizontal support resistance level, is down here. That is 3870. MACD clearly in bear mode and pushing to new levels of oversoldness. So this move is getting oversold. But if we look at, okay, if we pretend that MACD is a bounded indicator and there's our maximum level of oversoldness, well, we got a long ways to go to get to that level. And so anyway, just not pretty action in the equities. This is Dow in the monthly, same picture here, you know, MACD sell, but still in a bull mode in this monthly time frame again. This is a Fibonacci retracement of the move out of the big scary plunge. This March of 2020, we got the big scary plunge. We got this big rally coming out of it. And so a 38% retracement of that move takes us back to, what's that, call it 29,800, and potentially that's a support resistance level. Let's draw it in real quick, you know, maybe a little bit lower than that 38% retracement, something like that. Potential support level, but again, that's not close. You know, that's not close to where price is today. In the weekly time frame, sell signal on the moving average, drop below support at this upper median line, drop below this horizontal support, got a potential support level just a little bit lower, 31,830 or so. MACD in bear mode, suggesting that primary trend is down in this time frame. Let's see, Dow in the daily. This is I've highlighted the death cross, which is how some analysts refer to the 50-day moving average crossing below the 200-day. But more importantly, we can see that price has, with today's action, has pushed below this support resistance zone. And, you know, there's just not a lot. You know, we could argue that there's, you know, maybe something there, but you know, these aren't strong support levels, and notice that they were never tested. So if we go and we say, okay, well, there's our next support level, it was never tested as support. This is a little bit better because, you know, there's resistance, there's support. So we at least tested this level, but that's 31,200 points. So another 600 points to the downside to get to that support level, which still is not all that strong. Nasdaq monthly time frame, simple trend line gives us that. I'm not suggesting that that's where we're headed, but that is a potential support level, is just a traditional straight trend line. Clearly, we have lost this support resistance zone with today's action. Next support level is here at, what is that, basically 11,000 or so. Bull mode on a sell signal with MACD. Weekly time frame, sell signal on moving averages. Prices drop below this current support resistance level. MACD in bear mode, suggesting that primary trend is down. Support in this time frame, you know, we might look something like that, which again, it's 11,000. So got a ways, that's 1,000 points. What's that, 10%, 8%? So another 8% decline to get to that support level. Oops, sorry, this is a messy chart. This is NASDAQ in the daily time frame. And actually, I've been watching this. NASDAQ's been in a downtrend pretty hard. Actually, started, what's that, December of 21. So the last, you know, what's that, 4 or 5 months, NASDAQ has been in a technical downtrend. Lower lows, lower highs, lower low, lower high, etc. We got this one big relief rally. And of course, now we've rolled over and we're heading lower. MACD clearly in bear mode, suggesting the primary trend is down. Today, we've lost that support level. And not only did we lose that support level, and one of the reasons I say that we lost that support level and we didn't just temporarily penetrate it, look at where price closed today. So the low today was 11,939 and price closed at 11,967. So we're 30 points away from having closed on a low. And so the absolute most bearish case would be if it actually closed on its low of the day. It's 30 points away from doing that. But anyway, that's a very bearish price bar. The upper wick makes it even more bearish. The fact that if you look at this as a shift pitchfork, so price dropped down, found support along the top of this fork, pushed through, tested the upper median line there for resistance from below. The test failed and price rolled over. And so that's where we're at now. Nasdaq has tested this resistance level from below. The test failed and now price has rolled over and is headed lower. Support in this time frame comes in down here, 11.6, 11.5, somewhere in there, clearly in bear mode based on MACD. Folks, that's all I got. I just wanted to take a quick spin through the equity charts. They don't look good. In my opinion, folks, now is the time to get physical. And by physical, I mean, we need to be protecting our wealth with real tangible goods that have actual value. Precious metals, real estate, food, tools, seeds for your garden, real tangible goods that you can hold in your hot little hands and you know they have value. It's stuff that you can use. Nobody cares, and it doesn't matter how many zeros there are in your monthly account statement. If all that money goes away, who cares? It's a piece of paper you get in the mail every month. I mean, they don't even mail them anymore. You got to log into your account and see what your monthly statement looks like. Anyway, point is, folks, I strongly suggest and I strongly encourage you to get out of paper assets, stocks, bonds, all kinds of paper out there, even paper precious metals. I mean, if you're holding SLV and think that you own silver, you're kidding yourself. SLV is not silver. SLV it's not a stock, it's an ETF, but it ain't silver. That's the key point. SLV is not silver. GLD is not gold. None of those ETFs are physical stuff. And so what I am telling you, I can't tell you anything. All I'm doing is stating my opinion. I'm not going to tell you anything. What I am suggesting to you folks is that you move some of your money into tangible good. Nobody's going to care how much your stock account was worth after it's lost 30 or 40%. I mean, it makes a good sob story if you're willing to even admit, oh yeah, I just lost 40% of my retirement funds. I mean, that's not something I want to admit to my buddies. Anyway, I'm off on a rant. Folks, I feel for you. If you're invested in the equity market, I encourage you to take a strong look at your situation and just take a look at what's going on in the world and think about, do you really want to be invested in stocks right now? So that's all I'm going to say. Have a great evening, folks. We'll see what the markets do overnight. One last point. So as bad as the equity markets got beat up today, gold sat, silver sat. I mean, yeah, they got beat. They've been beat to heck last couple of days, but on the day when the equity markets were dropping hard, gold did its thing. It held its value, which is exactly what precious metals are supposed to do. So anyway, I'll talk to you soon, folks. Have a great day.